Warren Buffett is a familiar name to all of us when it comes to financial investing, but what can we learn from some of his largest holdings, and can we try and profit in the short to medium term? This is the share price chart of Berkshire Hathaway, Warren Buffett's investment company. In this video, I'm going to talk a bit about his approach to markets. Then we'll look at Berkshire Hathaway in a bit more detail, and also his two biggest holdings, to see whether there are opportunities for us as investors and traders. Actually, we do have a position at the moment. If I go to the portfolio, so Apple makes up the biggest part of Warren Buffett's publicly traded portfolio. We bought into Apple at 361 back in June. So we're going to take a look at this in a lot more detail. Clearly, the Apple shares have pushed out to fresh all-time highs since then. So I'll talk a bit about the investment approach, and then we'll look at three different shares in a lot more detail and see if we can get a trade on. Hello, I'm David Jones from Capital.com. And I thought we'd do something different again for this video. Take a look at what Warren Buffett, the legendary investor, has been up to, and whether we can profit from following his lead. So as usual in this video, I'll talk a bit about three different companies we're going to look at, three different stocks. We'll jump back onto the platform, have a look at things from a technical point of view, which is not very Warren Buffett, and see if we can get a trade on. As usual, if you're watching this, if you could click on subscribe, it does help support the channel, and it means we can continue pushing out, hopefully, lots of interesting videos like this in the weeks ahead. Right, let's get into it. So just in case you don't know who Warren Buffett is, he actually turns 90 this month, but he is considered one of the most successful investors ever, often referred to as the sage of Omaha. Omaha in the US is where he grew up, and of course is where he is still based today. He's, at the time of recording, the fourth richest person in the world, chairman and largest shareholder of his investment vehicle, the publicly quoted company, Berkshire Hathaway, Berkshire or Berkshire, depending on which side of the Atlantic you're on. Of course, he's famous for having a very long-term outlook when it comes to stock investments, and it's definitely served him well, outperforming the S&P over the decades. One of his quotes is, "Our favorite holding period is forever." So that does put it in perspective. Slightly different to the approach that we take normally on this channel. His long-term approach is best encapsulated in the quote, and there are many great Warren Buffett quotes if you want to Google them. But he says they could close. I buy on the assumption they could close the market tomorrow and not reopen for 5 years. So let's talk about Berkshire Hathaway, the quoted way of buying in, basically to Warren Buffett's investment approach. So famously, Mr. Buffett dumped airline stocks sort of right in the eye of the storm of the pandemic, just as it had started to spread, I think back in March or April. At the end of June, the company had a record amount of cash ready for investment, something like $146 billion at Berkshire Hathaway's disposal. In the second quarter of this year, the company spent a record $5 billion in buying back its own stock. So again, representing clearly some faith and commitment to the future growth of the company. Apple is the company's largest stock holding. So this one stock accounts for something like 40% of the portfolio of Berkshire Hathaway. The company recently added about $2 billion of Bank of America shares, taking its holding up to about $24 billion. So Bank of America is now the second largest holding for the company, and it's Apple and Bank of America we're going to look at in more detail. There are two listed types of shares. There's Berkshire A shares, which are more than $300,000 a share, and there's the slightly more accessible B shares. We quote the B shares. We'll have a quick look at Berkshire A, then have a look at the B shares on our platform. So here's the really long-term view of Berkshire Hathaway shares. Going back, the A shares these are. So going back to the beginning of the century, they were around $50,000 a share. At the moment, of course, they're up at, well, you can see on the chart, 322. So a six-fold return since then. I'm going to jump back onto our platform and take a look at the slightly cheaper B shares. So here are the Berkshire Hathaway B shares. They set all-time highs back in Jan, up around 231 a share. You can see, of course, we have a recovery going on off the March lows, arguably lagging behind indices such as the S&P and the NASDAQ, which is, of course, out to fresh all-time highs, but a definite recovery going on there with, lots of support coming in the 170 to 180 area. But at $215 a share, a more accessible way, perhaps for many of us, to gain exposure to the brilliance of Warren Buffett. But what I'm going to do now is talk about two of his major holdings. Then we'll look at those in more detail and see where the opportunity could be. So let's talk about Apple in more detail. Apple's always, of course, a really popular stock. Mr. Buffett says, I don't think of Apple as a stock. I think of it as our third business. And of course, it's the largest holding in his publicly traded stock portfolio. The latest quarterly earnings for Apple definitely beat expectations. It showed the best ever revenue on a quarter. And considering, that we were in the pandemic and lockdown, Apple was seen by many analysts as really blowing out of the water for that quarter. Earnings per share came in at $2.58. The market was expecting just above $2, about $2.04. And of course, with earnings, it's all about how it performs versus expectations. So a fantastic result for Apple on those latest earnings. All this means that at the time of recording, the shares are at an all-time high. They're up 50% for the year to date. Another incredible performance, given what we have seen, of course, in markets this year. There is a share split coming for Apple, a 4-for-1 split. Companies do this to try and make their shares more accessible. So if Apple shares are trading at $400, for example, after the 4-for-1 split, the shares will be trading at $100 and shareholders will have more shares than they had at the $400 price. It doesn't change the value of the company, just makes the shares arguably more accessible. That's the reason Apple have said they're doing this. But at the moment, they're about $450 a share. So you just need to bear that in mind when we look at the support and resistance levels. If the split has happened, divide the numbers by 4. So the most immediate hurdle is the latest all-time high at the time of recording, up at $458. After that, I think we're just looking at psychological levels up to sort of $500 a share. On the downside, lots of levels left on the way up. The most immediate one, I think, is the old highs, around about $400 a share. Let's jump on the chart, look at things in more detail, and see if there's an opportunity. So here's the really long-term view of Berkshire Hathaway shares, going back, the A shares these are. So going back to the beginning of the century, they were around $50,000 a share. At the moment, of course, they're up at, you can see on the chart, 322. So a 6-fold return since then. I'm going to jump back onto our platform and take a look at the slightly cheaper B shares. So here are the Berkshire Hathaway B shares. They set all-time highs back in Jan, up around 231 a share. You can see, of course, we have a recovery going on off the March lows, arguably lagging behind indices such as the S&P and the NASDAQ, which is, of course, out to fresh all-time highs. But a definite recovery going on there with, lots of support coming in the 170 to 180 area. But at $215 a share, a more accessible way, perhaps for many of us, to gain exposure to the brilliance of Warren Buffett. But what I'm going to do now is talk about two of his major holdings. Then we'll look at those in more detail and see where the opportunity could be. So let's take a look at Apple in more detail. I've got the chart going back here to 2015. The white line on the chart at the top, that's where we made our latest purchase. I think it was the 24th of June. Let's just zoom in because I think what's relevant here is what's been going on this year. So the position in the portfolio, we ended up buying in about here. So the third week of June, after the market had broken out through those old highs. Let's just take this off for now. And also, let's just focus on the price. We'll come back to the RSI in a second. So the old all-time high was coming in around 330 a share earlier in the year. Then, of course, shares sold off towards 220. And we've had this fantastic run higher since then. Let's just pick up on this latest trend off those March lows. So with a trend like this, for my money, I've just got to be a buyer on dips. We have the existing position. I mean, we had the breakout on their earnings. So you can see here, end of July, the share price moves through $400 a share, has moved ahead more than 10% since then. Lots of support coming in. I think at around about 400, if we were to dip back to there. After that, pretty big support coming in around about 355, that sort of area. Let's bring the indicators back into the equation. So not surprising in the short term with the RSI, we always see this with RSIs when we have strong trending markets. The RSI has been overbought since the end of July. The MACD, which is when the MACD gave a buy signal back then towards the end of July, and has stayed overbought as the shares have moved higher. But of course, this is why I think you have to occasionally take these extremes with things like RSI with a pinch of salt, because it was pretty much overbought since the beginning of June when the shares were around 325 a share. So I think in a strong trending market like this, price is much more important. So let's focus on that. So what I'd like to do is buy a dip. So if we did get a dip back to the low 400s, that looks like an opportunity. We have the existing position on Apple anyway, and perhaps a stop the other side of these lows, somewhere the other side of 350. Let's just set that up. So my order's ready to go. I want to buy 4. If the price falls to 410, perhaps a little bit optimistic at the moment, but it is only back to where it was less than a couple of weeks ago. If that order gets filled, put a stop order in at 340. Let's just place that order. And I think we need to do perhaps a little bit of maintenance on the existing position. Let's take a look at that. So I bought in at 367 with a stop at 320, and that was for, I think, a couple of £100 of risk. Because the market has moved reasonably in our favor, I think we need to move the stop up on that one. So what I'm going to do is move my stop to break even and slightly more. I'll move the stop to 390 on that. So that's done. So this way, I'm locking in a bit of profit, but I don't want to get out now because the trend is still strong. So I'm happy to run the existing position, and we'll see if this new order gets filled. But for me, it's only if we start to lose that July low does it look as if this trend is well and truly over. But for now, that breakout we saw in Apple has certainly performed well, and the stock is still strong. So let's talk about Bank of America. Different story to Apple, but July results for the latest quarter, they beat expectations as well. Earnings per share came in at 37 cents a share. That was versus the 27 cents the market was expecting. Revenue came in line with expectations. Bond trading revenue was the star performer here, up by around 50%. Equity trading up by around about 7%. But a very different performance, those Apple shares we were looking at. So Bank of America shares for the year to date down around 24%. So a bit of a weak performance. But does this mean there's potential here? Let's talk about the levels, then we'll jump on the chart. So for me, the next really big obstacle is the May highs, up around $29 a share. But then we do have various support levels left on the way down. We do have something of a recovery trend going on in Bank of America. Let's jump on the chart, take a look at this, and see if there's an opportunity. Bank of America is a really interesting one. It's still well off the highs for this year. Highs for this year was set pretty much at the beginning of January, just above $35 a share. The share price almost halved going into March, and is trying to recover, but is still almost 20% below those highs when we have the S&P 500 at the moment, at the time of recording, still pretty much back to those previous all-time highs. So I think we have a bit of a lagger here in Bank of America. But what I'm interested in is the trend. This recovery trend is still going. So even though it's a little bit slow, let's pick up on this trend. So our recovery off the March lows looks something like this. Great trend line. We've got 3 touches on the trend line. All looks good. We've got trend line support coming in around 24. So for me, I'd definitely be happy to be a buyer on weakness. I could put my stop either underneath these July lows. They're coming in around 22.35, that sort of area. If I want to give it a bit more room, perhaps the other side of 20. So I think this is another one where I'm going to place an order. But let's take a look at the RSI and the MACD. So the RSI, again, overbought at the moment because we have had a bit of a run over the last couple of weeks. So if we're going to follow the RSI, if the market does what happened last time the RSI was overbought, beginning of June, we did see something of a sell-off. MACD gave a buy signal middle of July. It's still long, but not really moving to an extreme. So what I might do here, again, I think is place an order. The market at the moment is 27.27 to buy. I'm going to put my order in, I think at $25 a share for this one. with a stop loss the other side of 20. Let's set that up. So I want to buy 50. If the price drops to 25, if that gets filled, put a stop order in the other side of those May lows. So put that in at 1950. And it's for our usual risk in this example of just over a couple of £100. That's what we normally risk on these trades. Let's send it through. I do think this is an interesting one. Clearly, it's lagged behind the broader market recovery, but a great recovery chugging along since March. And I do think it starts to get interesting if we do see it under a little bit of pressure from the current levels. That's it for our look at a couple of popular stocks with Mr. Warren Buffett. We'll leave things there. So from me, David Jones and Capital.com, good luck with your trading. For more trading videos just like this, please subscribe to our channel.